Hey everyone, and welcome to the weekly review. This week we once again did not drop, and we had an attempt to go down on Thursday, which was quickly reversed. But I still think we're kind of have a small bearish bias just for Monday and Tuesday, and after that it will depend on economic data, but most likely bullish. Next upside level is 471. For next week, my expectation is more or less towards another consolidation week. This week was up 1.5%, 1.05, so very small up week. And I think odds are we will get another sideways uh, consolidation week in which we can swing between 460 and 450. Let me turn on what I need, and that's the Q3 updated Q3 range. So this is the quarter now, and open, mid, high, low. And let's zoom in. And I will turn on the levels I'm interested in as well. So uh, we saw this drop. Friday was bullish, and we got this move up. Uh, my reference for this type of move is still this kind of push up, pull back, lower high, and then retest of the lows. And if that holds, we go up a lot. Also here, like we drop, we go back up towards the highs and still make a lower high. Then we retest the lows and then we just shoot up. And even though we had this retest of the 455 area on Friday during the day, I think this is still the case. We're coming to the end of the month, so 31st on Monday. And if you remember, we have the usual liquidity drop every end of the month. Like this is end of the March and liquidity drops. Then we have end of April liquidity drops, end of May liquidity drops, end of June, and very likely to have a liquidity drop on Thursday. So Monday, it doesn't mean that we equities will drop as well, but it's more likely than them going up. And what I would expect for this is the combination of hedging for jolts plus the liquidity drop to potentially go for a retest of 450, 52 here, and then maybe on another VIX crush for jolts, go back up towards the highs and just go sideways in this range here. So this range is probably gonna keep us contained for all of next week. Um, the way this will play out depends a lot on the circumstances, like we can do for the gap fill, which is 453-ish, and then go up. We can just go to this level here, like 454, 455, for a more, let's call it slow drop, and then go back up. But uh, right after the liquidity drop at the end of the month comes the liquidity pump at the beginning of the new month. So starting on Tuesday, and assuming we don't get a very hot jolts print, we should start going back up late Tuesday, maybe Wednesday. But still, I don't think we can break out of the new highs quite yet. We will see. It is obviously possible. And once we break out of this range and start going higher, we should do something like this. And the target is 471, like I already said. And the target is for August OPEX. Next week, we have 3 weeks until then. Next week is fine to be a consolidation week as long as we go up big during the last 2 weeks of OPEX. This is kind of what I expect we will see. This is not timeline accurate, like it has to be a lot faster than I drew here, a lot slower. Like OPEX is on the 18th. Somewhere like this. And people have gotten used to a market moving very fast, but this is not really to be expected to and to be the norm. Like the faster we keep going up, the bigger the pullback will be when it actually comes. So don't expect that we do this move immediately. And if we do, it's more of a short. Um, Another thing I did was the liquidator. Been playing around with the ranges for the liquidity and looking back at the one for before the COVID crash, we had a clear channel going on, out of which we deviated for about 3 months, actually more like four. So we broke out around October and stayed above it, and that lasted until February when we got the COVID crash. And now the post-COVID crash period, I'm liking this curved channel thing, and we're very close to the top, but doesn't mean equities can still go up. Like if liquidity increases, this will come down. Let's just assuming equities stay flat. If liquidity increases, this thing will also come down and makes us less overbought. But what the expectation is that at some point we will go above it, and that's the short signal, and we wait and see a bigger pullback. Now coming back to this is kind of it. If by some reason we go to 470 next week, it's a clear short. If not, uh, we just wait. So expect next week to be a bit swingy. I kind of expect both jolts, considering the other economic prints and all the indicators turning up. I don't see how jolts, unemployment, and NFPs can do non-hot prints. So even though short-term flows are supportive and bullish, the fact that jolts, NFPs, and unemployment are likely to be hot will cause moves up in yields, will cause move ups in dollar, and those are headwinds for equities. That's why I kind of think next week we just go sideways, and we could have multiple uh, uh, moves up, multiple moves down, and do this kind of thing for at least the next week. So this would be like Friday. Yes, we break out the following week, and then we go up for 1 or 2 weeks slowly or relatively slowly. This is kind of my expectation. So take this with a not with a grain of salt, but know that the way we move inside the range can be very volatile. So don't take this literally. Like it can be down first then up. It can be up first then down. It can be both up and down multiple times, and be prepared for that considering the situation now. But once the breakout happens and we do the back test and then we run up to 470. I'm not gonna do a weekly selection this week. Just gonna talk about mega caps a bit as the weekly selection. And I'm a fan of Tesla, Apple, Google, and Amazon. The others are potentially bullish as well, but I don't like them and I will not play them. So Tesla is kind of bottoming, like doing this, preparing to do something like this. Also, the trend line, we should see at least a retest of this trend line, even if it gets rejected. We should see a test of it if the divergence continues, and that should mean a move up to 80 to 85. So this would be, let's say, the bearish scenario, lower high, and we maybe retest this or go even lower. Doesn't matter right now, but even in the bearish scenario, this is bullish, at least short term. Then we have Apple. There's been a lots of flows coming in for Apple. I'll go do the 4 hours because this is drawn on 4 hours. It's been holding on the on the trend line, respecting this, and it looks to me like it wants to turn up and break out, do something like this. And it has earning next week, so next Thursday. Uh, there have been lots of put selling on 190. Like Apple hasn't go below 190 since what's this, like July 12th. Uh, and last couple of days I saw lots of flows for 215, 220, 200 as well, and I think it's ready to go up. Assuming earnings are okay, this should run up to 215, 220 without any issues in the next couple of weeks. But remember, earnings for Apple are on first day, and my swing period is exactly or first days here on the third. So my swing period is exactly this time frame. If we get to Thursday after hours and Apple is bullish, of course we will start going up with the whole market on Friday. Then we have Google. So I like Google because it's at a big inflection point, and if we break above this level, we should run easily towards 140, 145. And last but not least, we have Amazon. Also as a bit of an inflection point like this low here where we had a breakdown. And if it gets above it, next target would be 150. This low area, which is the actual breakdown from the consolidation top. Yeah, that's it. Like I said, short video this week, and more of a quiet week behind us, and expecting a volatile but not necessarily meaningful direction-wise next week. Have a good week. Bye bye.